Welcome back to The Truth About the Market, where we cut through the noise and talk about what's really happening in aviation. Not the hype, not the headlines, but the truth. I'm Jason Zilberbrand, president of VREF. I have appraised just about everything from Cessnas to Gulfstreams for clients that range from the FAA and SpaceX to celebrities, Fortune 50 companies, as well as fleets you've definitely heard of. I've owned and operated my own aircraft, and this podcast is sponsor free, which means there's no paid for commercials, there's no paid for opinions, no spins, just the unfiltered truth. Before we hop into today's episode, I wanted to let you know about a couple of events that I am participating in that you might find of interest. On November 11th, I am hosting a webinar for the American Bonanza Society titled Aircraft Value Trends and What Beach Owners Need to Know in Today's Market. It goes live at 7 p.m. on November 11th, which is a Tuesday, and you can register at bonanza.org. On Friday, November 14th, I am hosting a pretty cool webinar called Hanging Your Shingle, How to Earn a Living and Manage Your Appraisal Business. And in this webinar, I am going to teach you how to run your own appraisal business. Better yet, if you are an ASA, you can earn CE credits, and even better than that, it's free. So visit asachicagochapter.org and sign up, and then hopefully I will see you on the 11th for the ABS and on the 14th for the ASA webinars. So today's episode hits close to home for a lot of owners and lenders. We're going to be talking about what happens when the market slows down and when your aircraft isn't moving, and not moving in like terms of flying, but moving in terms of resale. So we're going to do a deep dive into why aircraft sit and how fair market value, orderly liquidation value, and forced liquidation values really work, and how you can protect the value of your aircraft in a stagnant market. You know, in aviation, a slow market isn't just about fewer buyers. It's when the days on market triple and buyer confidence erodes and aircraft start sitting even when they're priced competitively. And piston singles like Bonanzas and SR22s, they've tripled their days on market exposure since 2022. Turboprops, light jets, they're all starting to show similar trends. And interest rates, insurance tightening, and high operating costs are all contributing. But the biggest issue is not the tightening of insurance or the higher operating costs. The biggest issue is seller expectation lag, because a lot of you are pricing aircraft like it's 2021 and it's no longer a 2021 market. You know, price follows demand, demand follows confidence. Sellers need to track actual sales. I tell people this all the time. Watch the market, you know, and if you're a buyer, watch it. If you're a seller, watch it. But you need to track actual sales. You need to look at real data, not listing hype, right? And if you want to stay aligned with reality, you know, it's those numbers of what's actually selling for what that becomes critical. There's three key valuation concepts that I think every owner should know. And I'm going to go over them. You know, so a lot of you are familiar with the term of fair market value. You'll see it as an acronym, FMV. Its definition, certainly the one that we use as an appraiser and the one that we use at the ASA, is it's an arm's length deal, right? And the price that's being set is between a willing buyer and a willing seller, and there's no compulsion. But in today's market, fair market value could easily be 10 to 20% below an asking price, especially in aircraft markets that are not the super popular models. But how many of you hear the term orderly liquidation value, or even worse, forced liquidation value? And I think that those are terms that you're going to start hearing, especially, now I'm talking to the lenders. If you've got a portion of your portfolio that isn't performing, right, or is on the verge of default, or even worse, on the verge of repossession. So orderly liquidation values are important because, you know, that's a price that has compulsion, albeit mild, right? It may be an auction, but it's some sort of forced sale. And typically those numbers are anywhere from 25 to 40% less than fair market value. Um, even worse is forced liquidation. And that's super distress. That is an auction where there is no reserve. Um, and typically forced liquidation values can be 50%, 60% below fair market value, right? So in slow markets, fair market value can start behaving like orderly liquidation numbers because leverage shifts to buyers and pricing discipline determines who sells and who sits. So let's talk about that. Let's talk about why aircraft sit. And let's talk about the top 6 reasons that aircraft do sit. And when they sit, that means the plane's not getting sold. So, regardless of what kind of aircraft it is, piston, turbine, engine time is still number one. Looming overhauls, they not only deter buyers, but they attract what I consider to be a subpar buyer demographic. It's usually people that are inventory dealers or wholesalers. They know the market well. They have the ability to get around those engine issues because they do have so much experience. But they're also going to be the low ballers. Those are the shark tanks. Those are the deals that when you get an offer on an aircraft that's got double overhauls coming, you should know right off the bat the group of people that you're going to be dealing with. The second reason why aircraft sit is avionics. And honestly, it runs the gamut from outdated systems to inoperable systems. I can't tell you how many aircraft that I look at where the autopilot doesn't work or something else doesn't work, and it's listed right there, it doesn't work, and then the seller, obviously they're going to be dealing with a real disconnect because, folks, avionics is so expensive today. It's not just the price of the component, it's the price of installing the component. And for an integrated avionics suite, you're now dealing with a custom panel, and so all of that is going to get pricey very, very quick. um the third reason why aircraft tend to sit, and we've talked about this a bunch too, is either incomplete logbooks or, um, or I don't know, logs that are in another language. There's all sorts of things that start to fall into place with logs and issues with them. There's no easier way to scare a lender or a buyer than to have messy logs in another language and then on top of that being incomplete. Um, And it's also really difficult to overcome. You can have logs translated. I see it all the time, Japanese to English, Spanish to English. It happens. That's not a big deal. But when logs are missing, especially newer logs, and let's say you've got an aircraft that's 50 years old and you've got the years of 30 to 40 years of age missing. Well, the plane's been through 30 annuals, right? So I think you can overcome from an airworthiness standpoint what you're dealing with. But most lenders don't like lending on aircraft that don't have complete logbooks, and there's an inherent value to those logs. So if you have an aircraft sitting on the market with incomplete logs and you're asking top dollar, that's the reason why it's not selling. The number 4 reason, cosmetic neglect. And it's not just not being washed and not being detailed. It's really just terrible visible imperfections, right? Um, Paint cracking, peeling. Maybe it was a cheap paint job and it's orange peeling. Maybe there's substantial hail damage, which, by the way, is a touchy one. It probably isn't an airworthy issue, but it is damn ugly and it's going to be really hard to overcome, especially if you can see the neglect or the deficiencies from a distance. If you're 100 yards out and you can already see these things, once you get up close, it's going to be just a minefield of issues. Um, and what's worse is that cosmetic issues are so easy to fix. Like to put a brand new paint job in an interior in a plane, you're probably looking at a 1-to-1 in terms of money out the door versus credits you're going to get from a resale standpoint. But what you're not taking into account is that the plane's going to sell 1,000 times faster. What is difficult is picking paint and interior colors for the resale market. My advice, because I've done it 1,000 times, just don't go with anything too crazy. Use neutrals. Tan, gray for interiors sells really well. Everybody likes tan and everybody likes gray. When it comes to paint, maybe you just do a Matterhorn white or a basic Snow White base paint, and you give a credit for the accent stripes to the purchaser. Real easy. Number 5 is market saturation. This is one that never, ever gets spoken about, but this is really an important one. And this is another reason why you need a broker, because you need to know the market you're walking into. If you're selling your airplane, like an SR-22, and there's 150 of them for sale, how does yours stand out? Right? That's market saturation. Too many identical models listed. If you want yours to sell, you've got to make yours the standout. Sometimes the only way to do that is through pricing, which just happens to be number 6. How about that for a segue? So, unrealistic pricing is absolutely like, it's crazy how often I see this. People will call me and be like, I'm trying to buy this airplane and he's not taking any of my offers, and the owner's getting insulted, and I'll be like, what is he selling it for? And I'll look and it's 30% over the VREF number. I mean, at that point, I would say good luck, right? So owners that are anchored to either an outdated market or outdated comps is a huge problem. Did you know VREF does more appraisals than anyone else in the market? With thousands of aircraft appraisals completed every year, why trust anybody else? Go to vref.com to learn more. While we're talking about it, functional obsolescence also hurts value. Even well-maintained aircraft lose demand when newer technology shifts, and then those expectations shift along with it. So sometimes there's very little you can do. Other times, a lot of this is very controllable. This episode is brought to you by VREF, the trusted name in aircraft valuations and appraisals. Whether you fly a piston single or manage a business jet fleet, VREF keeps you grounded in data that matters. Visit vref.com to know what your aircraft is really worth before you buy, sell, or finance. So let's switch now to the psychology of a stagnant market or a slow market, because selling in a slow market requires realism. Owners assume their aircraft is special. Everybody assumes that what they have is the best. Your car is the best, your house is the best, and you go to sell it and you hold on to that, right? So buyers then assume if it hasn't sold that there's something wrong with it, and each month on the market costs money. It costs money in hangar rent and insurance, and then lost opportunities. A $50,000 price cut after 6 months often will just catch up to the market. It doesn't get ahead of it. And in a slow market, you have to price your aircraft as if it's for sale next month, not today. If there's nothing else you learn about a slow market, it's that you've got to price your aircraft for the future decline, right? It'll put you ahead in a declining market, not in line with it. And when you ask too much, savvy buyers in a slow market, they punt. They won't even look at your aircraft. So the key is to shorten time horizons with data, transparency, and responsive pricing. So how can you turn a stagnant market into strategy, right? So there's steps that you can use to stay proactive. One, which I think is a really easy one, is you can ask us to literally value or appraise your plane. It will give you defensible data before you list it. You can share that valuation with buyers. It allows you to be an educated seller. You can combat lowballers because that report is going to defend you 100%. And by the way, it is so nice to have an appraisal or evaluation to send to a lender who is looking at funding that buyer. It makes everything super transparent and defensible. Number 2, fix the small issues. Presentation sells, right? I talk about this all the time. Don't take pictures of a dirty airplane. Go wash it. Go spend $500, have somebody detail it. Go hire a professional photographer, spend another couple $100, and have that plane photographed. It's going to be the best bet. You want to put the best foot forward. Presentation sells. Number 3, be transparent. Full disclosure, folks. Buyers, they want to trust you. So even if it's minor, even if you think it's no big deal, tell them, put it in writing, get it in the listing. Number 4 is a little bit of a tricky one, right? And it's adjusting your expectations, because if you think a fast sale is 30 days, but your pricing expectations are 90 to 120 days, you are very disconnected, right? So if you really do need it gone in 30, you better pricing it accordingly. So refer back to what we were talking about. You got to get ahead of the market. Think about market locally, not globally, right? So when you market your airplane, and everybody does this, the first thing they do, trade a plane, controller. It's become like salt and pepper. Every time I talk to a buyer or a seller, controller, trade a plane. And there's nothing wrong with it. It's just a global market in a tariff rich environment may not be the best bet to sell the airplane, especially for those piston guys. And I'm really talking to piston guys right now. Um, you have to realize that because of tariffs, import and export has become very difficult. So sometimes your best bet is your own backyard. Facebook Marketplace, closed ownership groups in Facebook is fantastic, especially for owner-operated aircraft, even light jets, turboprops. You get to interact with people that actually own the airplane. You can sell direct. You can skip all the nonsense. Now, I'm not saying it's going to close any quicker. There's still all of the things that go into the deal. But if you're trying to figure out how to market a plane that's not selling, your approach may be incorrect in how you've been going about it. The first things that I do is I contact my local MRO, I contact my local AMP, and I tell them the plane's for sale, especially if it's a model that you know is popular, but for some reason in a slow market, nothing's selling. Let them know. They might have somebody come in that afternoon who says, hey, I'm looking for, a 172 and I'm looking for this. That's how you get it sold. And then you got to monitor it. You got to monitor your exposure, because there's nothing worse than an overexposed aircraft that hasn't sold. You got to audit your listing performance, and you got to do it monthly, if not weekly, because the goal here isn't to discount, it's to align with the current market. So let's switch horses. Let's talk about where things are going. Let's talk about the future, because over the next year, I'm expecting choppy waters. I think, OEM production is going up. A lot of it is because of 2020, because of COVID. The OEMs got stuffed with orders, right? And so they're still playing catch up. But we've got aging fleets; they're harder to maintain. The maintenance backlogs, not only they persist, but they're getting worse. Older jets and turboprops with unsupported avionics or costly inspections are going to continue to lose value, while turnkey, modernized aircraft that are truly turnkey, they're going to retain not only demand but value. And for buyers, this is an opportunity season, because I think down markets are huge opportunities. For sellers, data is power. Knowing your true value prevents panic, and it positions you to move when you're ready. The best time to understand your aircraft's value is before you have to explain it to someone else. So let's zoom out for a second, because the bigger economic picture is shaping everything we're seeing in aviation. And I think, 2026 looks like it's going to be another slow but consistent, steady year. And I think it's going to look a lot like the one that we're coming out of now, because the US economy isn't in trouble, but it's not on fire either. And most analysis, they expect GDP growth to hover around, 1.5% to 2%. It's modest, but it's far from a recession. Inflation is easing, yet it's still above those pre-COVID comfort levels. And so core inflation might land around 3%, meaning costs aren't going to fall back to 2018 territory anytime soon. And this is coming with a softening labor market. Unemployment is probably going to tick up, and it's probably going to hit, high fours. And while it's not a crisis, it is a sign that we're in a overheated job market, and that market is cooling off. And that'll slow wage growth, and that's going to slow consumer spending, and that's going to mean less impulse buying, including high-end pistons and turboprops and single single pilot owner-operated jets. But everyone is watching interest rates, and the Fed has started trimming rates at the end of 2025, and there's probably going to be more cuts in 2026. If the stars align, we could see the federal funds rate drop into the low 3% range by the end of 2026, which would be fantastic news for aircraft financing and refinancing. But it's only if the economy cooperates. And tariffs and trade frictions are still a headwind. While productivity gains from artificial intelligence and automation and those things might help offset some of that, think of 2026 as an even keel year, a transition from high inflation and high rates towards stability. But it's not going to be a boom. Bottom line, the macro economy won't save the aircraft market in 2026, but it also won't sink it. And I think prices are going to stabilize. And I think liquidity is going to return slowly. And those who stay data driven will navigate that turbulence just fine. So let's bring it back down to the flight line for the micro view, because I think that this is more important. At an operational level, cost pressure remains a theme. Maintenance, labor, parts are all expensive, and they're not coming down anytime soon. The shops are full, supply chains are still uneven, and anything that needs a specialty part or older avionics component can take months. Margins are tight across aviation. FBOs, MROs, and even flight schools are dealing with higher fixed costs. Hangar space, insurance, utilities are all biting at a profit. And for aircraft owners, those same factors translate directly into holding costs and then into slower sales velocity. Companies are postponing big capital expenditures, unless there's a strategic reason behind it. That's true across manufacturing, aviation services, even avionics upgrades. The mindset right now is replace what you must, but stretch what you can. Skilled labor is another constraint. Even as hiring slows in other sectors, aviation still can't find enough qualified AMPs. We talk about this, all the time. I've brought it up on other podcasts. There's a huge shortage of avionics technicians and instructors and mechanics. And, it's that shortage. It's the reason why your next annual or pre-buy is going to cost more and take longer. Trade schools need kids to enroll. We got to get kids involved in aviation. And it starts today. I think everybody that's listening to this podcast, if there's someone who's a teenager in your house, you should mention trade school. You should talk about how these jobs are in such huge shortage, because job security is something that we would all love. And this is a perfect opportunity to turn a shortage into a windfall. So maybe consider taking the plunge at a trade school and learning to become an AMP. On the consumer side, caution is absolutely creeping back in. We see it. I see it. Everybody sees it. Buyers are selective. They're more selective than ever. They want super clean pedigrees and strong maintenance records, and they want a turnkey aircraft. And anything that's got a question mark or anything that causes them, to kind of skip a beat or think about it, it's going to sit, because liquidity is bifurcating. The good stuff is still selling. It's the rest of everything else that's sitting, right? It's that lingering of, bad aircraft, unfortunately. In short, the micro picture mirrors what we see at the macro level. It's stable, but it's selective. The market rewards discipline, data, preparation, not hype. 2026 is the year where professionalism wins and speculation loses. If you're tired of guessing about aircraft values, try VREF Online, real-time data, quarterly updates, and over 900 models at your fingertips. From residual values to depreciation trends, it's the platform trusted by lenders, insurance companies, and professionals worldwide. Subscribe today at vref.com. Start making decisions based on facts, not feelings. I just read a recent Alphabet organization market report, and honestly, it felt more like a victory lap than an analysis. Lots of buzzwords: confidence index this and tight supply that and bonus depreciation momentum. But it doesn't quite match what's happening out there on the ramp, does it? These guys, these brokers, they don't sell new airplanes. They moved used, pre-owned aircraft. Yet the report leans heavily on OEM backlog numbers and leftover 2020 delivery schedules. Like that somehow translates into resale strength. Folks, it doesn't. Those factory orders don't automatically mean liquidity. They just mean airplanes will eventually show up and need a home in a market that's already softening. And the truth is, the real story is about what's already been sold, because that's what everybody's talking about. These are aircraft that are being delivered today, but were ordered, over 5 years of bookings from COVID. And that's what's going to determine inventory flow and pricing stability and how relevant some of these dealers stay, because OEM orders are cooling and bonus depreciation. Well, I never thought it was the biggest, advantage anyway. And I've talked about that. I think it's fading, but we're heading into a cycle where real demand, not tax strategy, will do the talking. And look, most owners today aren't naive. They're super sharp. Many of them run companies. They run, all sorts of crazy businesses. Some of them even fly for a living. If there's one thing they know, is interest rates and absorption rates and days on the market and depreciation trends, and they know it better than most folks. And, calling a flat quarter momentum isn't optimism. It's a spin. The reality is confidence doesn't move airplanes. Realism does. And as this next cycle unfolds, that's what's going to separate the smart operators from the salesmen. Well, that wraps up today's episode of The Truth About the Market. In today's episode, we unpacked how to market your aircraft in a slower than normal market environment, as well as a projection as to where we're headed in 2026. If this conversation helped you see the market differently, do me a favor, share this episode and subscribe to The Truth About the Market. And remember, when you need accurate, defensible, data-driven aircraft values, there's only one name in the industry to trust, and that's VREF. Visit VREF.com to get started today. Thanks for listening. I'm Jason Zilberbrand, and this is The Truth About the Market. Until next time, fly safe and stay smart.